Boom shakalaka, with the Pi cycle bottom chart suggesting a Bitcoin bottom on July 11th of 2022. Jim Cramer may have actually just put the hammer down and ended the crypto bear market. You definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're going to talk about why Jim Cramer saying the crypto market could go down even lower could be the very bottom. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us over on Twitter at the Crypto Love. Push the like button, let's get to 1,000 likes. Now today, 18, about as fearful as yesterday, definitely up from last week and last month. Overall today, the market down just a hair, 1%. Bitcoin at 21.33, Ethereum at 11.35, BNB at 2.34, XRP 32 cents, Cardano 45 cents, Solana $35, and Dogecoin 6 cents. And if you want to know the top coins today based on artificial intelligence and machine learning, they would be Seek, Tencent, Leo Token, OKB, and iExec RLC. If you want to check out Token Metrics for yourself, there is a 1-week free trial, and they have 30% off this week. And I should remind you that market bottoms are when they pick out amazing coins like Matic, aka Polygon, and also Helium, so you can buy them before the price explodes. Now, as we know, as we've been tracking, we've been talking about the Pi cycle bottom indicator put together by the Real Plan C that called the exact bottom in 2015, 3 days from the bottom in 2019, uses across the 471-day SMA times 0.745 and 150-day EMA, and it has been predicting a new bottom around July 9th. Now it's looking like it's going to be July 11th, 7-11 right there, potentially the bottom. But it turns out that Jim Cramer may have just made the crypto bottom. Now, why is this? Well, he just recently tweeted, crypto really does seem to be imploding, went from 3 trillion to 1 trillion. Why should it stop at 1 trillion? There's no real value there. What an awful asset. NFT sold to you, made up. Now, historically, I don't know. Think what you think. I mean, he has mad money, a whole entire show on investing. But if we track his suggestions, guess what? At the absolute market top, called for a 40% gain on ETH. Didn't happen. Not only that, but since he recommended Ford and Nike, they dropped 25% and 7%. Not only that, but he first bought Bitcoin back in December 2020. And then during the bear market in June last year, he sold all his Bitcoin saying the price is not going up because of structural reasons. 4 months later, price of Bitcoin surged to all-time high, $69,000. Not only that, another notable tip occurred in August 2021 when he suggested buying Coinbase stock coin as it was cheap at $248. At the time of writing this, it's $55. So that being said, well, maybe if you trade the opposite of what he says, you might actually be right. But he may just be following what's going on Twitter, because right now, everybody on Twitter, I mean, you don't have to have Mad Money or any other TV show on CNBC. Everybody's just saying Bitcoin and cryptocurrencies are going to zero. But let's examine this, because right now, everybody is very, very against crypto, against Bitcoin, against stocks. Kind of the opposite of when the price was high, almost the exact opposite. But if we take a look at the consumer confidence now, it is the least confident since 1971. And you know what happened? Every time in the year following when these confidence ratings were so low, went up 15%, went up 22%, went up 29%, went up 20%, went up 22%. So all of these, the price tended to go up. As a matter of fact, we've had a terrible first half of this year in terms of stocks. But you know what happened each of the last 4 times we had terrible first halves? We had a great second half. So potentially we have that coming up. Also, we have evidence here that suggests that we had a major capitulation event. Now, capitulation does not mean bottom, but capitulation oftentimes happens around when we have the bottom. Now, if we take a look at this, volume hit all-time high 2 weeks ago, and as a general rule, trading volume is the highest when markets capitulate, as such capitulation creates major bottoms. So you can see down here, a major capitulation event, similar to what happened last summer, similar to what happened to the COVID bottom, similar to what happened back in November of 2018. All of these were major bottoms, suggesting the bottom could already be in. Not only that, July has always been bullish for Bitcoin. In 2017 through 2020, guess what? In July, Bitcoin went up 68%, 37%, 25%, 33%. All of these suggesting price could go up, because as of right now, this bear market is already within the historical bear market norms. Both in percentage and also in days. The Bitcoin drawdown from all-time highs reached 73% compared to previous bear market lows between 75 and 84%. The duration is 435 days from the April 2021 all-time high, or 227 from the November 2021 all-time high, similar to every previous bear market we have experienced previously. And thanks to blockchain, we can see exactly what the smart money is doing. Not what the mad money is doing, but what the smart money is doing. Bitcoin whales have been buying up Bitcoin at an amazing clip since April. And look at this divergence. They are buying up Bitcoin as the price is coming down. Eventually, this is going to reach a supply shock once all the weak hands have sold, which likely happened right there at that spike. But if we go on further, we can see right now, no matter what you think, if you take a look at Bitcoin entry risk map, it is the lowest it has ever been. Buying Bitcoin now is similar to buying the exact COVID bottom. Like the best moment you could have ever bought Bitcoin in its history, when it went from $3,000 to $69,000. This is the same risk as buying it back then. Almost negligible risk. Which brings us to this one chart right here. We were talking earlier on about the pi cycle bottom indicator that's suggesting that we have a bottom coming up, about July 11th. Now this pi cycle bottom indicator is based on two moving averages, the 471-day SMA times 0.745 and the 150-day EMA, these lines crossing. But if we take a look at another crosses of moving averages, this is the 137-day EMA cross below the 730-day SMA. Well, guess what? This also called the bottoms, and it already crossed on June 18th, meaning the bottom would already be in pretty much the same exact time that we had this capitulation event right here and the massive crash. So these things paired with Jim Cramer potentially calling the bottom, well, the bottom may be in. We may be headed towards higher highs, and that would be awesome. So that's all for today's video. If you did enjoy it, make sure to like, subscribe, click the notification bell. I'll catch you guys later. Have a good one. Love you. Peace.